Hello everyone, welcome back. We are now in segment 2.4, and in this segment we'll be discussing another accounting concept called matching principle. Please recall our earlier discussions where we have discussed four accounting concepts so far. We have discussed money measurement concept, business entity concept, principle of conservatism, and dual aspect concept. We now come to the last accounting concept. As I have already mentioned, there are other accounting concepts as well, but for a purpose of balance sheet analysis from a banker perspective, these five accounting concepts would suffice. So in this segment, we will be looking at a very important concept called matching principle. Matching principle, in fact, forms the base for many accounting terminology, advanced concepts, in fact, that we are going to encounter in our future lectures. These include depreciation, inventory, and even small entries like raw material consumption have the base in matching principle. So, of all the five accounting concepts we discussed, this is the most important concept. So, please pay attention, and in case you're not comfortable, please rewind the video and watch it again. Of course, we'll be revisiting this matching principle a couple of times later in view of its importance. When we actually get to the concepts where it is applied, we will once again discuss the matching principle in detail. But in this segment, I would like to give you a brief introduction of the matching principle to get your beginning idea. Later, we will definitely revisit this as and when required. So, to explain the concept of matching principle, let us take a small example where imagine I am a vendor of pencils. Right? I'm a small businessman. I sell pencils. So, what I do, I daily go to the manufacturer of the pencil. I buy 10 pencils from him at the rate of ₹1 per pencil. So, I pay him 10 rupees every day in the morning. And with these pencils, I go to the school and sell the pencils. Right? I sell the pencils at a rate of, let us assume, 2 rupees. Right? So my profit, my plan is that I'll make a profit of 20 minus 10 every day. So 10 rupees per day. Since I'm selling at 2 rupees, right? Since I'm selling at 2 rupees, while my cost is 1 rupee, it means that I make a profit of 1 rupee on each pencil. So if I happen to sell all 10 pencils, I'll make a profit of 10 rupees. However, if I sell only, say, 6 pencils, right, I'll make a profit of 6 rupees. If I sell only 4 pencils, I'll make a profit of 4 rupees. So it is profit of 1 rupee per pencil, right? So this is a scenario. So assume that today is my first day of business. I'm starting this business today. So I buy 10 pencils from the vendor, from the manufacturer. I pay him 10 rupees and I go to the market, right? But it so happens, right? It so happens that at the end of the day, I could sell only 4 pencils, right? Only 4 I could sell, and the remaining 6 are unsold. So fine, I go home. I go home with these figures. So what I would like to know at the end of the day, as a businessman, I would like to know what is the profit I have made, right? So I drop a small financial statement like this. So I list the sale on one column and the cost on one column. Since I have spent 10 rupees, right, 10 pencils at the rate of 1 rupee, this is my cost. I have incurred a cost of 10 rupees. And then I see what is the sale I have made. Since I have sent 4 pencils at the rate of 2, I've achieved a sale of 8 rupees. So now my profit is 8 minus 10. So it is a loss of 2. And I am perplexed. I'm not sad that I made a loss, but I'm perplexed. I'm surprised because I thought I've actually made a profit. See, my calculation is that on every pencil I make a profit of 1 rupee. Rupee profit per pencil. If I sell 1 pencil, I make a profit of 1 rupee. Since I have sold 4 pencils, I should have made a profit of 4 rupees. Right? This is what the financial should have said. But it's telling me a loss. It is telling I made a loss of 2 rupees. So this is a perplexing scenario. So something is wrong here, right? And I want to fix it. So I consult somebody who knows financial statements, and this is the advice I receive. The person says that there is a mismatch in the sense that I am taking the sale of only 4 pencils. I'm actually comparing it with the cost of 10 pencils, right? So there is a mismatch here. Please see carefully. Sale we are considering for only 4 pencils, 4 into 2, 8. Whereas the cost we are taking for 10 pencils. See, if to get a correct picture, you either take the cost of 10 pencils and match it with the sale of 10 pencils. You'll get the correct profit. Or, if you want to take the sale of 4 pencils, just compare it with the cost of 4 pencils. This is how you actually match the cost and sales. But by taking sale amount of only 4 pencils and cost of 10 pencils, you're bound to get a loss, right? What happens if you had sold only 2 pencils? You get 2 into 2, 4. So 4 is the sale and the cost is 10, then you have to make the loss of 6. See, but again there is a mismatch. See, the quantity is not matching. While you're comparing sale for 4 number of pencils, the cost is for 10 pencils. So clearly there is a mismatch. So what the person to whom I have approached has suggested is split this statement into 2 parts, right? Split this statement like this: day 1 and day 2. Please note that at the end of the day 1, since I have sold only 4 pencils, I have 6 pencils left, right? I have stock of 6 pencils. So I start day 2 with 6 pencils. Day 1 I have sold only 4 pencils. So splitting the sale of the 10 pencils into 2 days. On day 1 I have made only sale of 4 pencils. So I'll find out the financials for only 4 pencils on day 1. And for the remaining pencils I'll calculate separately on day 2. So now I recast this financial statement into 2 separate tables, right? Now see what happens. On day 1, since I have made sale of 4 pencils, my sale is 4 into 2, 8. Now to get the cost of day 1, I will take only the cost of those 4 pencils. Right? I will take the cost of only those 4 pencils, even though I have incurred an expenditure of 10 rupees. See, my cash has gone out to the extent of 10 rupees on day 1, right? 10 rupees cash has gone out. This is a fact. I'm not denying it, right? But only for the purpose of preparing this statement to get a more reliable and more accurate position of the profit, I am splitting this 10 rupee, right? The cost of the 10 pencils incurred, the 10 rupee over 2 days, right? What I'm doing, I'm splitting the cost into 2 days. On day 1, since I have sold only 4 pencils, I'm mentioning only the cost of those 4 pencils on day 1, and the cost of the remaining 6 pencils I'm mentioning separately on day 2. Assuming, of course, I'm going to sell all those pencils on day 2. So this is how I'm splitting the cost, right? And here the sale will be for the 6 pencils. 6 into 2, 12. Now I separately calculate the profit. So in this case, the profit will be 8 minus 4, right? So here it is 4, and here the profit is 12. 12 minus 6. Here is 6, right? So overall profit, you get this 4 plus 6, that is 10. And this tallies with our earlier intuition that since I'm making a profit of 1 rupee on each pencil and I have sold a total of 10 pencils over 2 days period, I should have made a profit of 10 rupees. And this is what it is confirming. So this is correct. So please note that this is the crux of matching principle, right? What we do in matching principle is we have to match the sale and the cost, right? There should not be any mismatch. See, in this first scenario, what actually is the problem is, right? The problem here is the sale quantity and the cost quantity is not tallying, and you are bound to get an inaccurate picture of a profit or loss. So the correct position is always match the sale and the cost. That is what the matching principle says. So let us take another example. Suppose I am a steel manufacturer. So my raw material will be iron ore, coke and limestone. Let us assume coal is the only raw material for our purpose, right? Coal is the only raw material. So for simplicity, let us assume that to manufacture 100 tons of steel require 100 tons of coal, right? This conversion is not correct, but let us take it for simplicity. To manufacture 100 tons of steel, we require 100 tons of coal. Okay. So every month, right, per month, I'm going to manufacture 100 tons of steel. So every month my coal requirement is 100 tons. So for example, let us take we are in the month of November. In this month, my production will be 100 tons of steel, right? So my coal requirement is also 100 tons, right? And let us, for simplicity, again assume that the cost of all, whether it is steel or coal, whatever it is 1 rupee. So when I speak 100 tons, it is 100 rupees. This is 100 rupees. So let us assume for simplicity is a multiplying factor of 1. So let us speak in rupee terms. So please note that in actual production process, what happens is Even though per month you require coal of only 100 tons, you'll be stocking more than 100 tons in your godown. Might stock 200 or 300, something more than 100. The reason being that you're not certain about the supply of coal. What if there's a labor strike at the coal mine, or what if there is a strike in the transport vehicles? So we are uncertain about the supply of coal. So what companies usually do is they stock coal, right, in the godown. So even though you require only 100 tons for the month of November, you stock 200 or 300 tons. Let us assume that the company is stocking 300 tons of coal. 3 months buffer it is keeping in its godown, right? Now the company wants to prepare the financials for the month of November, right? Right? Since the company is producing 100 tons of steel, let us assume that it is selling all those 100 tons of steel. And we are assuming the unit cost is 1 rupee. So the company is making us income of 100 rupees by selling 100 tons of steel. But the cost that the company has incurred is, though it required only 100 tons of coal for producing this steel, right? It has actually purchased 300 tons of coal. So the rate of 1 rupee, we're assuming unit cost, the company has incurred 300 rupees. So you get the impression that the company has made a loss of 200 because the company only made a income of 100 while its expense was 300. So it has incurred a loss of 200. But this is wrong as per matching principle, right? So be clear what the matching principle says. Since you sold only 100 tons of steel, matching principle tells you what is the coal that has gone into manufacturing these 100 tons of steel. So the amount of coal that has gone into manufacturing only these 100 tons of steel is 100 tons. And you have to take the cost of that 100 tons only and not the entire cost of the purchase. Right? This is what the matching principle says. You always match the income and cost. Right? By not doing so, you are making a mismatch. See, 100 tons of steel doesn't require 300 tons of coal. You purchase 300 tons of coal only as a buffer and keeping it in the godown in case of exigencies. But now, while preparing financial statements, taking 300 tons of coal on the cost side, you are creating a mismatch. So matching principle says take only the cost of that amount of coal that is required to manufacture that 100 tons of steel, and that is only 100 tons of coal. And thereby you get a correct picture of the profit of the company. Let us take one last example. This example, let us say we are a real estate builder. So we're into business of building flats, and let us assume that we have floated a new venture, right? And this is a venture of 100 flats. Each flat costs 100 lakhs, that is 1 crore, and the sale is total 100 crores. This is the sale of the total flats, 100 flats. And for this, maybe we are incurring 70 lakhs per flat. So maybe 7 crores is the 70 crores, right? 70 crores is the project cost, right? So a sale is 100 crores and the cost is 70 crores. So profit would be 30 crores. So let us take a scenario where we are in March right now. Okay, we're in March 2014 right now, and let us assume that my construction has started somewhere in last year, September 2013, and I have already completed 10 flats, right? Let us assume that I already completed 10 flats. We'll assume that 5 are totally completed in full, ready for occupation, and respect to the other 5 flats, they are in progress, partially completed, maybe 40% completed or 50% completed, right? These flats are in progress while the 5 flats are already completed. So this is the scenario. Now we have we are in March 2014, and by March 2014, 5 number of customers have paid 1 crore. Since 5 flats are already completed, 5 customers I was able to find and sell these 5 flats, and they pay the 1 crore and ready to be occupied. So my sale for the year 2013-14 will be 5 crores, right? Now the question is, what is the cost? Please note that I have incurred cost for constructing 10 flats, right? 5 are completed, so I have incurred 5 into 0.7, right? So 3.5 crores on this completed 5 flats, And respect to the other 5 flats which are just 40% completed, we can assume around 1.5 crores is complete. So I have incurred 5 crores, whereas my income is only 5 crores. So if you try to arrive at the profit at this stage, you'll get a no profit, no loss, right? 5 is both your income and your expense. So you have made you neither made a profit or neither made a loss. But again, this is incorrect as per matching principle. What does the matching principle say? What did you take in the sales column? You took only 5 flats, right? So when you draw the P&L, how many flats did you take in the sale column? 5. So you please tell me what is the cost incurred for constructing only those 5 flats. 5 and 5 should go together. Since you incurred only 5 crores, right? Since you incurred only, 3.5 crores on those 5 flats, only that 3.5 will be the cost, and not the cost of all the 10 flats, that is the 5 crores, right? So your profit will be actually 5 minus 3.5. 1.5 is the profit you have made, right? So what happens to the balance work, right? You have incurred the 1.5 on the partially completed 5 flats. So what happens to that 1.5 is it goes to the balance sheet. It goes to balance sheet and sits in the form of work in progress. Please note that this is an advanced concept. We will definitely revisit it again when we come to the actual item-wise discussion of P&L and balance sheet in the future chapter. We'll discuss work in progress in detail. We'll discuss sales in detail. We'll discuss all advanced concepts. But for the moment, please note that when you are taking sale of 5 flats on the sales column, you have to match it with the cost of only 5 flats, even though you have constructed 10 flats. So let us see a couple of examples to make this concept more clear. So here I consider 4 scenarios. The amount, the flats that are sold is same in all 4 cases, right? In all 4 cases, I have sold 5 flats. What is varying is my status of construction. First case, I have constructed only 5 flats, right? Then 10 flats, 100 flats, and 2 flats. So it is varying. Of course, the third scenario is a scenario where the entire project is completed. All 100 flats are constructed. So what is same here is the sale quantity. I have only sold 5 flats in all the 4 cases. So let us see what is the P&L looks like in each scenario. So when you look at the P&L, so let us see what is the cost and sale for each of these scenarios, right? In the first scenario, since I have sold 5 flats and I have listed also the amount here, 5 flats at the rate of 1 crore will be 5 crores in all the cases. Whereas for this cost of construction, since we have assumed it is 70 lakhs per flat, it will be 5 into 0.7, 3.5. Here it will be 10 into 0.77 and so on. So here the sale will be 5 and the cost will be 3.5. Since we have only constructed 5 flats, right? Whatever the other flats that we have sold, we have constructed only those flats. So we'll straight away take what is the cost, 3.5, and sale is 5. So here we get a profit of 1.5. That is clear. So let's take scenario 2. In this scenario, we have sold only 5 flats, but my progress is 10 flats. I have completed construction of 10 flats. So my cost incurred in this project so far is 7 crores, whereas I received only 5 crores. So what is the profit in this case? See, as per matching principle, let us take the sale as 5 crores. But for the cost, I have to take only the cost of construction for these 5 flats. Since I have completed only 5 flats, please take the cost for only these 5 flats, that is 3.5. So the profit in the second case is also the same as the first case. In both cases, we have a profit of 1.5 crores, right? So it's immaterial whether I have completed 10 flats or, as in the third example, 100 flats. That's immaterial. How many flats I have sold? I have sold only 5 flats. So even in the third example, my sale will be 5 and my cost will be 3.5. Because 3.5 is the cost for constructing these 5 flats. So it's a different matter that I have completed 100 flats. But since I'm taking the sale for only 5 flats, I have to match the cost of those 5 flats only. So even in the third example, we have a profit of 1.5. So you might get it out. What happens to the remaining cost, right? So here there is no remaining cost, of course. But here, the second example, we are showing only a cost of 3.5, whereas the actual cost is 7. So there's a balance cost of 3.5. In the third example, there's a balance cost of 66.5. So what happens to the balance cost? Okay, for our purpose, we are showing up a financial statement where we are taking the cost as only 3.5. So what happens to the remaining cost? By not showing it in the P&L, are we not showing a lower cost value and thereby inflating the profit? So once again, remember, this amount goes to the balance sheet. This amount goes to the balance sheet in the form of work in progress. Will not be showing in the form of sales. And in the next year when we actually make the sales, take for example, in this 100 flats, okay, the third example where we're taking 100 flats. In this year, since we have sold only 5 flats, we're showing cost of 3.5. In the next year, let us assume we are going to sell the remaining 95 flats. In that year, when we draw the P&L, in that year, we are going to show the sale of 95. Since I'm going to sell 95 flats in that particular year, 95 at the rate of 1 crore will be 95 crores. That is the sale. And the cost will be the cost only for the 95 flats. Right, so the 66.5, that is the cost for constructing these flats, that is the 95 flats, will go into the next year. And you can see where the 66.5 is coming from. This 66.5 is coming from here, right? So if in the next year 66.5 will be shown in the P&L because it pertains to the cost of those 95 flats, and next year the work in progress becomes 0. See, I'm sure that this is a confusing concept. At this stage we are at the very basic level. We are going to revisit all these concepts once again when we actually get into the term-wise discussion of balance sheet, right? So we'll have a discussion again in later chapters. So don't worry, even if you're unable to grasp the concepts here. Please note that irrespective of the sale, irrespective of the cost incurred, matching principle says to match the sales and the cost. So in all these scenarios, since the sale is same, we have to take only that cost which is incurred for constructing the 5 flats. So in all cases we have a cost value of 3.5, and the balance cost, whatever we have incurred, will be transferred to the balance sheet in the form of work in progress. And in the next year, when we happen to sell the remaining 95 flats, then we will take the cost of 66.5 and the work in progress becomes 0 in that case, right? Anyway, we will revisit it at a later time. So just listen and try to grasp as much as you can. Even if you're unable to grasp, it doesn't matter. So what about the fourth example? The fourth example is a bit tricky. You see, we have sold 5 flats in the same case here also, but actually we have constructed only 2 flats, right? This is a weird situation. We have sold 5 flats, but we have constructed only 2 flats. So you might say, how can we sell 5 flats when we constructed only 2 flats? You're absolutely right. You're absolutely right. We cannot sell 5 flats when we have only constructed 2 flats. So in a later chapter, we'll also discuss another concept which is known as revenue recognition. Revenue recognition, in fact, is one of the accounting standards of ICAI. We have discussed the 32 accounting standards, and revenue recognition is a very important concept. We're going to discuss this at a later stage, but for the moment, please note that revenue recognition permits us to recognize only 2 flats, the sale of only 2 flats in the P&L of this year. So if we were to draw the P&L of this year, of this last final case, the sale will be only 2, since we have completed only 2 flats. The revenue recognition principle allows us to recognize sale for only those 2 flats. So the cost for these 2 will be 2 into 0.7, so 1.4. So we made a profit of only 0.6 in the fourth case, right? So what happens to the income on the balance 3 flats? Okay, we didn't consider the 3 flats, but we received the amount. So are we not going to show it as sale? No, we are not going to show it as sale. So that 3 flats, the 3 into 1, that is 3 crores, that amount goes into the balance sheet in the form of liability, advance receipt from customers. It is not sale. It is advance receipt from customer. And in the next year, when we happen to sell those 3 flats, right, then that amount, the advance receipt from customer, will become 0 and we'll show it as income, right? Again, this is an advanced concept. We'll have a repeat discussion on this at a later stage. So for the moment, this segment is all about matching principle. And what I want you to remember at the basic level is, matching principle tells us to match the sales and the cost. So whatever sales quantity, what is the sale amount you're considering? Corresponding to that, what is the cost incurred? Right? What is the cost incurred for manufacturing that particular sale quantity? Only that cost you have to take in the P&L cost side. The balance will be pushed into the balance sheet. Okay. So there is a term for this. Whatever cost we are speaking so far, it is known as cost of goods sold, right? Some call it as cost of sales, just cost of sales, whatever it is. So is the term clear? Cost of goods sold. This is not the cost of manufacture, but it's not the cost of production, right? The cost of purchase. You could have constructed 100 flats, but that is immaterial. Cost of goods sold is whatever is the quantity you have sold. Only the cost corresponding to that quantity will going to show in the P&L. So that is the term cost of goods sold. It is not at all equal to the cost of production. You could have produced, you could have constructed 100 flats. Your cost of production is totally different, but that is not relevant to us. Cost of production is not a correct way to arrive at the profit. So from the cost of production, we will make some adjustments and arrive at the cost of goods sold, which is the correct representation to arrive at the profit, right? So please be clear about the matching principles we have discussed so far. It just matches revenue and cost, right? So I mean, this is what we are going to see, right? We already discussed everything, right? Same examples, right? uh, I think this example takes apples as an example. We discuss pencils, same. We also have a steel mill example. We'll discuss this again. I think real estate was not it's not in the slides, but yeah, this is what right. This is what matching principle says in crack. At the end of the segment, all you have to remember is matching principle tells us to match income and expenses. That is what matching principle says. Please watch the video once again and see each of the three examples we have considered. We have considered a small example of pencils, we have a steel example, we have a real estate example. Please watch the videos once again, because matching principle is a very important accounting concept. In fact, we are going to discuss it again. Such is the importance of this concept. It's the most important accounting concept from the point of view of our discussion. And advanced concepts like depreciation, inventory have a base in this principle. So of course we are going to revisit this concept again, but please make sure that you have a very basic idea of what the matching principle says. It is only about matching the income and expenses. So in the next segment, we'll be discussing about accrual system of accounting, right?